Hey guys, Griffin Cooper here at Ablewaytech, and I wanted to show you guys some research we're doing on different exit strategies using the 30-minute time frame. Still applying our kata challenge principles, but looking at instead of doing intraday trading, this is going to be on the swing 30-minute charts. And this trade example here is going to be with Tesla. So let's get into it. Okay, so here we are. I'm just going right onto my platform here, which is the Thinkorswim. From TD Ameritrade, and we use our OWL bundle here to load all of our indicators that we use in our tortoise style of trading. So again, this is a Tesla on the 30-minute charts, and this was an SSC trade, and so yeah, I was waiting for the usual harsh winter or harsh sell-off, which I was using this blue box as my minimum manageable risk box, which was an R3. So it was a range stat here divided by 3. And I was looking for at least 3 of these down from this PSAR flip here when the RL10 turned, and we got almost like probably over 5 of them, it looks like. So that was, to me, a great, easy way to spot low risk ideas. So that was our entry. And then the main thing I want to show here is more than the entries was the different exits I was taking. So I'm kind of using this, it's kind of becoming this interesting kind of scatter plot of exits, which I think is really cool. So the green dot is our entry, and then at that point we knew that our initial risk, I'll actually draw it in. So our initial risk was down here at this RL10 swing low, right? At this first PSAR flip. So if price got through there, say it's not working, price is continuing down. And one of the first exits then I was testing as this risk box trail. So basically here was our entry, here's our exit. So this is like our risk box, this red box. And then price shot up here on the next day and then came right back down. So if I was just going to trail with, use a trailing stop that was the size of my risk, that exit was here, right, this red dot. So about break even. And then the next exit I was looking at was just an all or nothing basically exit. Like here was our target at the purple line, and then here was our initial stop. So I said I'm either going to get stopped out or I'm just going to take it all when I get to the when it hits the target. It actually did hit that target the next week, I think it was, or no, it was on Friday. So this orange dot was just an all or nothing profit taking exit. That one was pretty nice because that was about 2.5 R. Then the next exit I wanted to look at was something we use a lot with the PSAR. So this light purple would have been the exit if I exited when the price bar hit the PSAR. So that would have been right here, right? And to me, what's interesting is then looking at that versus when we say that RL10 is the true price. So sometimes what can happen is the price bars will get noisy and they'll tick you out, but then like this, the price continues up. So what if instead I exited when the RL10, which was more of a significant move, flipped the PSAR, and then I exit. So here's the flip, and I exit at the close there. That's this dark purple dot. And you can see that exit is way up here, much better exit. And then finally, just to really max out different styles of exits, was I saw what would happen with the Wu exit, which is a very relaxed kind of exit where we just keep that initial stop in place, and then once this PSAR gets 3 times, we get 3 PSAR dots above our entry. So it was like 1, 2, 3. Then we split our exit between, we just let our stop trail. This is the middle of the river indicator, and then the other one is it's a mix between a very relaxed, as you can see, this is a very relaxed trail stop, and then something really quick we call a sniper exit. And for that I use the spine of the dragon. Right, so we have this dragon going here, this orange, and just that middle when price crossed the middle of the dragon. So we had half of our exit was here, kind of a quick exit, but then what's nice about that is that then sometimes a relaxed exit, this one trailed all the way up until price finally here touched that middle of the river and got out here. So if you average this one and this one, it's probably right about at the profit taking exit. You kind of get this interesting scatter plot of the different exits, right? Some were way up here, somewhere here, somewhere in the middle, and it's kind of going to be a cool thing to then share this with you guys and see how the different exits work out. What are the different advantages, disadvantages of different ones, and what feels right to me is the one I'm going to end up picking to trade. Thank you for taking the time to watch the video, and I just want to let you guys know we do have a new cohort of our Applied Systems Development course starting on July 11th. That's going to be 12 weeks of live Zoom sessions that accompany our Applied Systems Development course. We're going to be doing a Kata Challenge workshop where we learn to trade these patterns I was just showing. So if that's something you're interested in or you want more info, just go to ablewaytech.com for more details. Thanks for watching.